Kia ora, ngā mihi nui kia koutou. E na rangatira mā nau mai haere mai whakatoa mai ki tēnei hui mariko. Ko Barry Coates aho, ko te kairahi o te putea whai whakaro. Nā reira, tēnā koutou, tēnā tātou katoa. So, good evening, warm welcome to you all. I'm Barry Coates. I'm CEO for the charity Mindful Money. We are a charity that aims to make money a force for good, as well as providing radical transparency for KiwiSaver and investment portfolios. We undertake these seminars to educate the public and highlight how investment can make a difference on issues that matter. This is the 17th seminar in this series, and on our website you'll see recordings for previous seminars on climate change, net zero, social housing, impact investing, investment in Russia, nuclear weapons, animal welfare, green property, and last week, ethical investment standards. So we've got a big range there, and please dip into it as you like. But tonight we've got a really special seminar, and I'd like to extend a very warm welcome to our two panelists, David Tikao and Temuera Hall. So let me introduce David first. David whakapapas to most of the marae based on Banks Peninsula, and his iwi affiliations are to Ngāi Tahu and Ngāti Kahunu. David's New Zealand born and bred. He moved to England in 1989, working in banking and finance, before returning to live and work in New Zealand in 2011. He's got a Master's of Business Administration from Massey and is paused on his PhD at the University of Canterbury, where his area of study is on the transfer of wealth of post-settled iwi, focusing on te rununga o Ngai Tahu. So David currently works at Investments Manager of Endowments at Ngāi Tahu Holdings, and was previously Executive Director of Whairawa, a superannuation fund with $120 million of funds under management and 31,000 members. Whairawa is owned and operated by Te Rununga o Ngāi Tahu. So I picked up one completely irrelevant fact about David, is that he's certainly the only person in the world that I've heard of shooting a hole-in-one on the same hole of a golf course in Surrey in England 2 days in a row. And David said on LinkedIn, whatever the odds of that, sometimes you have to make your own luck. I think that's a brilliant story, David. Warm welcome to you.
Kia ora, kia ora. Kia ora koutou ki tātou hui topa. Kia ora rangatira Barry, raua ko rangatira Temuera Hall, ki Ngāti Tūwhare Tō me Te Arawa. Nō reira tēnā koutou, ko Ngāi Tahu me Ngāti Kahununu nā iwi, ko Oto Hiki me te poho o tamatea nā maunga, ko Akaro me whakaraupo no moana, ko Ngāti Erekehu me Ngāti Wheki nā hapu, ko Onoku me Rāpaki nā marae, ko Tione Tāri Tikao, te tūpana tāne, ko Tikao te whānau, ko David Tikao Tukingoa. Kia ora for that warm welcome, Barry. I do have a couple of disclaimers. The first one is on the holes in one. I was single at the time and playing a lot of golf. So that did contribute to that luck. The next of my disclaimers is that I'm not a financial advisor, and so anything that I say tonight shouldn't be taken as financial advice. I am here representing David Tikao, who is a Ngāi Tahu iwi member, kia ora Kelsey, and not representing Te Runanga o Ngāi Tahu or Whairawa Fund Limited, where I am previously employed. But thank you so much for that warm welcome. Kia ora, Barry.
Kia ora. Thanks for that disclaimer too, David. It applies to all of us, and in fact all of our seminar series. So, David, would you like to just tell us about your work at Ngai Tahu? Because I was intrigued by, in a way, we invited you on here not only for your current role, but also for your work over a number of years at Whairawa.
Kia ora, Barry. It's a real privilege to work for your tribe, and having worked for the office of Te Ranganga o Ngai Tahu and being in the mix for giving the pūtea away to our tribal members is certainly different from being on the other side of the desk where you're charged with making some of that money in order to allow those tribal aspirations to come to fruition. But it's a hugely rewarding kaupapa to be amongst our whānau, especially when we get out to meet them kanohi ki te kanohi face to face. And I think our tribe are actually really good at doing that. We're 25 years now, almost 25 years in the making for our settlement, and that brings with it a lot of lessons. It brings with it a lot of challenges, and sometimes I do think that we are still finding our feet a wee bit in some of those aspects. So really appreciated the opportunity to come on and talk to you about it, and to hear more from Temuera as well.
Cool. That's a very good prompt. I'll introduce Temuera, and then we'll come back and talk more as a panel.
Kia ora.
Kia ora. Kia ora, Tim. Tim Hall whakapapas to Ngāti Tuwharetoa and Te Arawa Iwi. He's the co-founder and managing director of TAHITO, a world-first Indigenous ethical investment company. In partnership with JMI Wealth and Clarity Funds Management, TAHITO combines Indigenous Māori values with ESG measures and financial markets expertise to provide unique, ethical and sustainable investment solutions. Tim's played a key leadership role in a number of investment collaborations and partnerships. His expertise in driving kaupapa-based investment strategies and building enduring relationships. So very warm welcome to you, Tim, and particular welcome because Mindful Money's been extremely pleased and honoured to have TAHITO featured as our first Indigenous Māori fund on the Mindful Money platform, as well as being the first Māori fund in New Zealand. So that I think is a fantastic thing, and we're really pleased to have TAHITO there. So welcome to you tonight, Tim. Thanks very much for joining us.
Tēnā koe, Barry, tēnā kōrua, David, aura ki maunga, nai tau tangata, nai tau iwi kei te mihi. Me mihi ki te hunga piri nei rungi i tēnei purangi o te kaupapa o te pōnei, nā reira me ki haramai. Haramai ki ariari o tāringa ki te whakarongo, ko ngā tāringa o rongo mai tahanui o rongo mai taharangi o tūpai whakarongo wānanga. Iaku rangatira, iaku rahi nau mai, haramai tēnā koutou. So again, good to see you, Barry and David. Always impressed around what Ngai Tahu does and what they have achieved and what they will continue to achieve. And it's a pleasure to be sharing this panel with you. So just, TAHITO, as you said, we call it ethical Indigenous investing. It's premised upon Māori values, as you know, whereby we put the environment and people first. So this thinking is implicit in our ancestral Māori worldview, which centres on connection and the interdependence of all things. We call this whakapapa. It provides our creation narrative. It connects us humans to all aspects of the environment. Now, the foundation principle, we've termed it collective self-intelligence. Everything is interrelated. Nothing exists of itself. And that effectively is the Māori worldview. From one aspect, we are sort of looking backwards to go forward. We're applying our ancestral knowledge to benefit the future generations. And as you said, Barry, it's a unique way of measuring companies using Indigenous knowledge combined with conventional financial analysis and data, of course. And of course, data capture now is far more advanced in the last 10 odd years than what traditional investing had access to. So, I mean, our first fund is the Tahu Fund, which can be found on the Mindful Money website. And Te Tahu is the Māori name for the Tasman Sea. The fund provides an actively managed exposure to a portfolio of New Zealand and Australian companies, and it aims to generate a return better than the benchmark over the medium to long term. And we test ourselves against the standard Trans-Tasman benchmark, which is effectively 50% of the ASX 200 and 50% of the NZX 50. Now, what the fund applies a positive scoring system, which we call the TAHITO T-score. And it integrates values-based ESG screens. And it's important to note that ESG by itself is just a risk measure. If you want to bring in sustainability or ethics, you have to choose the ESG measures that represent those values or those ethics or those sustainability principles that you want to have reflected in your portfolio. So when we get into the engine room, it's a holistic socio-ecological system. It's driven by our values and it's consistent with that Māori worldview. So the T-score process, it favours companies that set clear and achievable sustainability and regenerative targets, that understand and measure their externalities. They adopt credible, sustainable reporting systems. They're transparent and accountable to their non-financial measures, demonstrate how they intend to reduce or better those measures, and then ideally they've incorporated or are moving towards sort of circular economy type principles. When we convert these values and ethics into measurable impacts, the TAHITO process identifies companies that either have a carbon zero or carbon neutral target or intend to aggressively lower their GHG emissions. You know, some large companies, it's actually quite a big task to move from where they are, and some countries don't have access to clean energy. So it's a big process for them to make that shift. We look for companies that aim to lower their energy and their water use, their waste level, toxicity waste, of course. They either have already or they plan to reduce their energy from fossil fuels and transition to a clean energy source, as said. They're aware of their biodiversity and aim to reduce the impact and revitalise their ecosystem. And then they strive for equality and equity in the workplace, in the governance, and in the management. And last but not least, they must aim to have a positive impact on the communities that they are in. And when we talk about those communities, we're not talking about the communities within the company, which a lot of the terminology can be misplaced or lost. We're talking about the communities that they around them in the areas that the businesses are set up or where they work. So, when we say we put the environment and people before profit, what this means is the companies must pass our stringent TAHITO score or T-score process before they can be considered for the portfolio. So we cover the non-financial measures first, and that's the foundation. And so, in summary, the system based upon our Indigenous values. It strives for balance and consensuality. Its behaviours are complementary and cooperational, and its target is reciprocity and harmony. So we set a sort of idealistic target and then measure how far companies are moving towards our ideology, which is different from a lot of companies which are just trying to prevent bad or trying to solve a problem. And I think that's another point of difference in the sort of Indigenous approach to investment, but just to everything really. So stop there, Barry.
So thanks very much. That's a fantastic framework. I've heard this before, Tim, but every time you talk about it, it brings out a sort of some new aspects and a richer meaning. So Thanks for that introduction. Can I sort of ask a follow-on question? I mean, you do have high standards, and you do kind of look for that positive difference. Do you find enough of these companies to invest in? It must make your investing universe quite a bit smaller, and I know there's the issues around diversification and so on. Do you have a kind of problem with, particularly it being Tasman, that there's kind of some perhaps shortage of good raw material to work with in terms of investment targets?
Yeah, what we've been presently pleased by is the advancement in our listed companies towards better sustainability measurements, sustainability practices, GRI reporting. Some of them are taking up the, B Corp certification, of course. We've got our New Zealand Toitu Tahua efforts. So there's been quite an advancement from when we started this a few years ago to now getting more and more companies that do come across our threshold. When as you know, we start with you say it's 250, but if you take all the companies across those two markets, we're 400 plus. We're lucky to get 70 or 80 that come through our screens, and then we whittle that down. Our mandate is 20 to 30 companies. So we find it quite comfortable now that we can fill those slots.
Thank you. That's a good explanation, because ultimately you're not looking for a huge number of companies. So I guess that makes a process doable from that. Tim, is there a time when TAHITO may be able to look at unlisted investments as well as listed?
Yeah, we've probably got to get the fund to a decent size so that you can bring in the illiquid part, because as soon as you go into direct investments, you don't have the liquidity, and so you either create a new fund which targets that longer term return on investment, it's growth type fund, or you allow a part of your fund, as you know, Barry, to be exposed to a lower liquidity profile. Because I think a lot of the good companies are not on our boards. So look forward to when we can grow into that space.
Yeah. And David, from your perspective, you've been an investment manager essentially for Ngāi Tahu through Wharawa. How does it look from your perspective in terms of seeing what Tim's doing at TAHITO and your experience of investing? You seeing a greater willingness for some of the iwi, Ngāi Tahu and others to look at these issues on a long-term basis?
Yes, absolutely, Barry. And I think that the tribal whakatauki mō tātou mō kauri a muri ake nei for us and our children after us is a prime example of that long-term thinking. That's been our tribal whakatauki since the very start. It's not going to go away, and it's the philosophy that really does underpin the work that we do in order to benefit our tribal members. The work that TAHITO do, Barry, for us when we were in Whairawa, it was a real journey, starting that fund, 15 odd years ago with our first number of members. In those days, it was a cash fund before it was moved into what was then known as a defensive fund, and the name changed to conservative around a short period afterwards. And so we had a lot to do to really future-proof the fund and bring it into a new regime before we moved it into the socially responsible investments that were being managed by Mercer. And that's one of the constraints that you have as a small fund with without the expertise in-house, needing to select a partnership that will be able to manage that aspect of the business for you, and according to your SIPO and your wishes. So it has been a journey. I think there is a way to go for Whaidauwa as a member of Whaidauwa and as a former employee that worked in the fund.
And one of the things that always struck me about Whaidauwa was not only your investment approach, but also your commitment to education and care for your community in financial investment and financial literacy, etc. That was part of the intention from the beginning, wasn't it?
It was, yeah. It's always been a real driver of the kaupapa, was to bring our whānau along with that journey, and not to just have an account with Whaidauwa that would help them to put those investments away for those very specific withdrawal criteria, but also to not just be a member, but to understand why they're a member. And I think we have really achieved that over the years. We've helped whānau to understand unitisation, the ebbs and flows of the GFC, of the volatility that we've seen recently over the last couple of years. So all those kinds of ups and downs have been a real education. I think one of the surprising elements for us actually came during that first shock to the system when COVID really started to take hold. And we were kind of expecting the phone to start ringing off the hook. But I think it's testament to our members, to Aotearoa, to New Zealand, and to the industry, that there is a greater understanding, and whānau are reading and upskilling and are more educated in these matters. And so we didn't have whānau calling us at all hours of the day and night to get a better understanding of it, because maybe the information is there, but we think that we've also been pretty good at holding the hands of our whānau in this journey during that period as well.
Kia pai. That's great news. And Tim, do you see sort of, obviously Ngāi Tahu's a fair way down the road on this? Do you see that level of interest also coming through in your relations with other iwi across Aotearoa, or is I'm not sure about the profile of your investors. Are a number of Māori investors coming into the fund?
Yes, I mean, for a lot of, we started off targeting the institutional investors, the big end of town, and of course you got to have a lot of technical information, and ideally they want 3-year track record, of which we're coming up to. But we're actually, one of the Ngāi Tahu Rūnaka are a client, and we've got a few Māori clients on board now, and it's starting to catch. So we made a conscious effort last year to go to retail with encouragement by some of the public out there. So we're now on the Sharesies platform, and we're on the Invest Now platform, and so that was interesting, because then we had to go through a integrated financial disclosure product, which was a bit of a step up. I mean, there's more regulation if you try and do good with your portfolio than there is if you don't.
Indeed. Yeah. I'm glad you made it through the other side, because it's great to have the fund available at a retail level. I think that's really exciting, because for a lot of people, I'm sure when they hear more about it, and we're keen to promote it, they'll find it very, very interesting as an option. And for you, David, do you find other iwi are interested in the Whaidauwa example, and do you see others setting up similar education and financial literacy programs?
Kia ora, Barry. Yes, indeed. We during my time with Whaidauwa, we were approached regularly from other iwi, and I think that's now a sign of the times where settlements are starting to mature. There are more opportunities, and those opportunities to distribute in a meaningful way, as Te Ranga o Ngāi Tahu have done for Ngāi Tahu whānau. Those opportunities are there now for other iwi, and so we were always open to discussing our lessons and what had gone great for us, and what was more challenging. I do think that the entry to market now is very challenging, and Temuera just mentioned that the regulation aspects, and that is an industry that is not just challenging but is hugely costly, and if you are trying to distribute your pūtea to whānau, and it's costing you more money to distribute than what it is to regulate and stay on the side of the compliance aspects, then that's a real dilemma that iwi face, and a real challenge and real paradox.
Yeah, that's an unintended consequence, isn't it? Because as you said, Tim, you shouldn't be penalised by having more regulation for trying to do the right thing, and I guess the same applies to distribution.
And we want, whānau's money. We want our whānau to have their money safe. We want it to, to not be risked in a way that it shouldn't be. And so, there's a complete understanding of why it should be there. It's just hugely costly, and so that's the trick, is to really try and manage that in a perhaps a lean and efficient way, like we have done at Whairawa. Or not, as the case is for some iwi. You just find it's too costly to enter the market.
And I guess both of this is really an industry of scale. That if you're big, then you've got a lot of volume to spread the cost over, and while you're starting up, it's a really kind of tough road to hoe, requiring lots of kind of hard work and long hours, I'm sure, in order to make it work. Do you see any way, Tim, that you can scale up? And it kind of brings in a question from one of our leading financial journalists, Rob Stock, who asked him the question: any chance that we're going to see TAHITO Te Tai o Rehua Fund available through a KiwiSaver scheme, maybe through Invest Now or some other badged brand?
Yes, so I mean, just following on from that last question, that the cost of entry. I mean, what's given us our leg up, of course, has been part of the investment services group, and of course, one of their arms is Select Wealth. So our fund is in the Select Positive Impact KiwiSaver scheme, and in their Positive Impact funds. And we're also in the JMI Wealth, which is another of the sister companies. We are in their some of their portfolios, and of course the group, or the shop, is on its bigger journey as it moves towards responsible investing, and of course towards sustainable investing. And we're sort of the flagship, I suppose. And then you've got Devon, which is again part of the wider group, and they're also pushing into the sustainability fund space. Barry, that's why we've sort of been enjoying what you've been, the challenge you put out there to greenwashing, and to, we've seen the Northern Hemisphere, they've just put out the SFDR and that taxonomy and drawn a hard line. So we can expect that sort of, I think, to come to New Zealand. COVID has sort of slowed up our growth, I suppose, not being able to get in front of people. Everyone sort of slowed down, and not being able to develop real relationships through the screen. But what we're finding is some really encouraging signs so far this year, and so we've got a high level of confidence. But we've got plenty of support from within the group itself to get us to scale.
We've had a question from David Woods, which brings into the sort of long-term perspective around investing. And I thought before answering the question, David, it'd be really useful maybe if you could talk about your current role at Ngāi Tahu and the investment strategy of Ngāi Tahu more generally, and how the long-term perspective is built into Ngāi Tahu's investment strategies, because you have quite a varied set of asset classes that you invest across.
Kia ora, Barry. Yeah, the investment strategy is very clear. It's that the overarching mission is to protect and grow the pūtea. So at our last annual report, we're ticking over 1.7 billion. At recent counts, we'd already struck the 2 billion mark. That's a quite a romantic story, and considering that we started out with 170 million in cash back in 98. And so there have been some wins along the way. We need to be able to grow that pūtea so that we can deliver a dividend back to whānau, back to our papatipu runanga. The support mechanisms and program delivery and opportunities for our whānau that arise out of the office distribution is still a priority. So that is one of the aspects that does set us apart from other businesses and companies. We've still got the focus is still to get the best possible outcomes for whānau, for our Ngāi Tahu whānau, and so we'll never move away from that.
Mm. And the type of investments that you choose are typically those that look at a long time horizon. It would point you towards a different mix of investments.
Yeah, we have got some of our investments won't be providing a dividend back to Te Runanga in the immediate future. So those are the sorts of long-term investments that are being taken on board. We've got the new residential units that are the development Te Pā Tahuna in Queenstown. So that includes quite a few Kiwi build homes. We've got a new seafood aquaculture project, Hananui in Murihiku down south. So that's also another part of our strategy, is to provide employment, and that will have much needed regional development and employment. So it's that's been, and also part of our investment strategy has been having Ngāi Tahu whānau come into the business, and our chief executive is Ngāi Tahu Craig Ellison. We've got our executives are full of Ngāi Tahu whānau now, who are qualified tribal members who are making fantastic decisions on behalf of our whānau. And so I think that's something that, as far as our investment goes, it's not just an investment in these businesses, it's an investment in our people, it's an investment in tangata whenua. And regional development is a huge part of our driver at the moment, and making sure that we're not just focused on delivering outcomes for our centre, our base around HQ here in Ōtautahi, that we are starting to spread the pūtea and to do that more equitably.
Do you have a formal system of metrics around well-being and livelihoods and employment and community that you use in addition to the financial metrics?
We do, and it's been 25 years, almost 25 years in development. So, I think that we are still learning. We're still finding our feet in some aspects, but we're really starting to make sure that those are the drivers that make it a more equitable place for Ngāi Tahu whānau.
It's very interesting. David Wood's question was also to you, Tim, around obviously some of your investors have a shorter time frame, whether how you can take that longer term perspective when perhaps some of your investor horizons are a bit shorter. Do you ever see some of those conflicts or trade-offs there?
I mean, when you're managing an equity fund, the way you're going to keep liquidity, of course, is by making sure that you're investing in quality companies so that they're always readily tradable on the respective stock exchanges. So we maintain that because people's situations change and they need to move their capital around. But that doesn't detract from the principles and the intent of the fund. So definitely our financial measures look for more the long-term sustainable type funds. And of course, we've seen, you look at the S&P 500, for example, compare that to 10 years ago and 20 years ago, it's quite a shift in companies that have shown resilience. So, what that means for us is, of course, we're not tuning the portfolio. We've chosen companies we believe that are going to be good for the long term. There might be significant economic events, which means that we'll put them on the sideline for a while, not necessarily put them in the bad bin, so to speak. But generally, we are holding on to companies where a lot of other, funds would just push them out because we like what they do. The story is good, and we believe that the leadership and the policies, their willingness and ability to change rapidly, because that's what's sort of key nowadays here. If you're not continually changing and adapting, you're going to get left behind. And good companies, good leadership are doing that. They are, driving sustainability. They are driving, caring for their people, caring for the environment, which are, the key things we look for. Our qualitative measures are built around measuring that behaviour shift towards the leadership that are better at bringing about this change and leading that change. And there's some fantastic companies out there that if you only just to read the financial reports on Yahoo or whatever site you look at, you'd miss the beauty in a lot of these stories.
Mm-hmm. Yeah. And I guess that's part of your role as a fund manager, to be able to go deeper into the company analysis and be able to understand more about the why as well as what they're doing.
And what's beautiful about New Zealand and to a certain extent Australia is accessibility to the governance, to the management, and being able to ask those questions. I think I've said this before. Often I'm sitting in there with a bunch of other fund managers, and I'll be the only one asking the non-financial questions. But that's changing. That's changing as ESG now becomes quite central to investment practice and portfolio construction processes.
I know you're a relatively small fund so far, since you're just in fairly early days, Tim. But does sitting in those meetings with those company boards and does that give you some strength as an investor, even if your amount of investment isn't huge? And are they listening and responding to the issues you raise?
Yeah, I think, again, good leadership won't distinguish between that. Of course, that does come into play, but if they're really good leaders, they will take on board comments from whatever quarter. And the fact that we're there and we're showing an interest is should be encouraging for them, because often there's only 5 or 6 of max 10 of us in the room with sometimes the CEO and the director and the CFO, and so you get quite one-on-one. And we've had a couple of sessions where we'll go and meet directly with companies, and they are open to meeting with us, because I think we bring a little bit of a difference to them. We send out a little memo and certificate each year to saying you're it's a little bit whakahihi, but it's about saying, hey, we're proud to have you in our portfolio. And so rise above just the financials, the dollars of this. It's about a bigger relationship and moving from transactional behavior to this relational behavior.
That's a really nice story. It's a really nice story. And David, I guess you've got a lot of those kind of relationships in Ngā Tahu companies and investments as well.
Yeah, I think that the whole ESG regime is helped in some ways. And exactly as Tem has just said, if you like the people that you are doing business with, it makes it so much easier. And so that's a wonderful sentiment to be able to bring to the table.
So for people in the audience on Facebook as well as on Crowdcast tonight, please ask a question quickly because we're going to finish in 5-10 minutes. These are fairly short, sharp seminars, so we're very pleased to have you here. So put your question down into the question box. A question for you, in fact, for you both. Thanks very much, Simon. What distinguishes a Te Ao Māori investment screen from a standard sustainability screen?
I mean, I'll jump in there first, David. I mean, it's the basis from where that screen is derived, and we set a set of values, and what we've had to do is we've had to write up a abstract understanding of that and then convert it into English. And then we've had to take it into an applied understanding and then translate that into measures. I mean, at the end of the day, you might find it's very similar to how someone else's measures, but it's how we got there. I think the pointed difference is we're quite genuine when we say we put people before and the environment before profit. I mean, we have some very hard lines, as you know, Barry, even with our exclusions. We don't have any exceptions to our exclusions. And I mean, whether it's luck or just the blessing of our ancestors that the system works and we're making good returns. We're beating the benchmark. And, we've proven that you can have highly ethical and sustainable fund based off of these Indigenous values and still be competitive.
Yeah. David?
I don't think I can add anything further to how Tim's described that, apart from it sounds like a consultancy gig opportunity there, and I'd suggest picking up the phone to Temuera and having a better chat to him about how they could look to leverage those aspects.
Yeah, it is an interesting one, isn't it? Because when you're talking about it, Tim, it really says that the usual investment framing is just way too narrow to pick up the issues of resilience. You talk about the relationships, the trustworthiness, a whole lot of those dimensions, and that's where a much more holistic framework can really help.
Yeah, it's what I find sort of a healthy challenge is, like what you do in your processes, Barry, to become a mindful fund, and then with RIA to become a certified product. It's quite involved now, the questioning and the systems and the processes. Our challenge is when you take a holistic view is trying to break it down into the parts so it fits into the boxes, because the mainstream system likes to put everything in boxes and in its lanes, where when you take a holistic view, as I said, this interrelated view, there's no separate parts, they all connect. And so I have to sort of, it's like deconstructed cooking, they take a deconstructed apple pie. I always have to deconstruct our process so that we can go and compete and get acknowledged under the leading ethical and sustainable companies or businesses out there like Mindful Money. Yeah.
We'll come knocking on your door and figure out how we can make it a little bit more holistic without deconstructing it too much. So last call for questions, please, audience, and then we'll wrap up. I've got a question, Tim. You mentioned that ethical investing is good financial investing. And obviously there's a huge amount of evidence now out there that if you invest in ways that will reduce social and environmental risk and governance risk, then actually you'll be able to get a better risk and return ratio. But it's also about impact, isn't it? So a lot of what your analysis does is go far beyond the financial sector, which talks about these issues in terms of managing risk, but you're really talking about far more about again, the holistic measures around respecting nature, about katiakitanga, about building community, etc. And do you find it difficult to talk to your financial colleagues about this stuff sometimes?
Oh no, I think the some people are still stuck in the traditional or conventional investing, and of course that's been developed over a long period of time. You look at applied finance and all the formulas and all the modelling that goes on around that, and then suddenly you've got this other view and goes, well, that's only now one part, and you now have to take on all these other parts of assessing what is a good business. And of course, I mean, it's been developing over a period of time, but in the last little while, it's ramped up considerably. Of course, it started probably with health and safety as the first real big prominent move to a different aspect of how you look at a business, to now ESG. And now, as you know, Barry, we're making the shift from just being avoiding harm, which is your responsible investing, into sustainable investing, which is a whole new system on how you now look at your investments, and of course the skill sets you need to have. Change. Yeah. Even the big accounting firms now, their non-financial type teams are just as big, if not bigger, than the pure accounting and audit type people. I mean, auditing the non-financials is a big industry.
Yeah, that shift into sustainable investing is really why we started Mindful Money, and it's really we're just excited to see some of the examples of that happening. David, to you, one of the fascinating things you said to me about your job is that you are partly responsible for a lot of the relationships and partnerships. And they include partnerships often with smaller iwi who maybe don't have the experience that Ngāi Tahu does. I mean, your track record, as you said, is amazing. Are you finding that those kind of partnerships with other iwi are becoming more common? Is there a call for Ngāi Tahu to partner and help bring them along the journey?
Absolutely, and we I think with Waikato Tainui and Ngāi Tahu being the front runners, at the start, we have got some experiences to be able to share, and I think that's part of the beauty of Te Ao Māori, is that we all whakapapa back to iO, and we have those shared experiences. We are always going to be beat up by our aunties if we don't do the right thing. No matter what marae you go to, it's the same, and so those that shared knowledge and whakapapa, it does break down barriers. It's actually a absolutely beautiful part of the role, is to be shoulder to shoulder with some of our cousins and other iwi, and I'm hugely excited about the opportunities that's going to bring for Ngāi Tahu whānau, for our businesses, and for Māoritum.
And thank you very much for Carly's comment in the chat. That's a beautiful comment, and that's very good. I think we're going to have to wrap up, but can you both sort of give us an idea of where's next for you in both of your areas of work, and maybe you first, Tim. What you've talked about having a KiwiSaver product and growing over time. You mentioned other types of TAHITO fund apart from the Trans-Tasman Fund?
Yeah, I mean, as soon as we sort of meet our thresholds, we to look at an income-based fund, because we know for a lot of our, particularly the Māori entities, they need to generate the cash off of their investments to be able to make the distributions or the dividends, which is their real, their real business, is improving the well-being of their hapu, the iwi, the whānau, and of course, looking after their taonga tukuiho. Well, you need a strong cash flow for that, and so I'm keen to get into a fund applying that same principles. We have already sort of participated and supported some private equity impact funds to help them stand up, just because the principles can be applied anywhere. We've just started with a Trans-Tasman fund. So, there's all your standard sort of financial products, of course. But I really look forward to trying to drive some innovation into this sector. And we fortunate on this journey to be working with Hiara Waiora, and that's working with Treasury on how we bring a Māori framework alongside the Living Standards framework. So that's exciting work. And then also with the Te Pūtea Matua, the Reserve Bank, and all the engagement they are having now with Māori around access to finance and just helping that capital get to the places that it's intended for without being chewed up through too many middle hands, and actually having Māori at that next level of actually participating in the management and distribution of that capital, not just receiving it on the receiving end. So there's some exciting things that we get involved in, and hopefully we got the challenge of trying to keep focused. That's once you've reached that space where you find there's too many opportunities, then that challenge is you can spread yourself too thin. So I look forward to those days, and they're kind of happening now. But
yeah, and I know that one all too well. And David, for you, what does the future look like?
Yeah, it's an interesting one. I mean, look at where the existing regime of non-ethical investing has gotten us. Apart from increased insurance premiums, because there's a 1 in 1,000 year storm has now become a 1 in 100 and a 1 in 20 and a 1 in 10, and then we're getting it year after year, or these sorts of challenges that are being delivered to us on a regular basis now, because of the non-ethical investing aspects. It's just a horrible place to sort of consider. And, we've got a chance to be able to really listen to and assist our whānau and our New Zealanders' aspirations. We want them to be able to have the future. We want a better future for our tamariki. We want a better future for our mokopuna, if there are mokopuna in your whānau. And so, those are the challenges that we want to be able to overcome. And I think that, mindful money, the whole ethical investing and ESG regime is going to be able to contribute to that. And, I'm excited to be a part of that.
Fantastic, David. That's really a great perspective. Thank you both so much for joining this seminar. It's been a real pleasure and a real honour to have you both on it. Thank you. I'm just going to conclude with thanks also to you as the audience. I think we've heard an absolutely fascinating discussion, a lot of insights and wisdom and some inspiration. So we're now gearing up for our exciting last few seminars in the series. So I hope you'll join us next week for an interesting seminar focusing on climate change, and particularly using investment to take action on climate emissions. So we're welcoming Craig Weiss, who's CEO of New Zealand Green Investment Finance, and Matthew Arnold, who's CEO of Russell Investments. And in conclusion, we need to thank our sponsors for this series. Their support has been terrific in enabling us to put these on. So that's AMP, Booster, Generate KiwiSaver, Harbour Asset Management, and PwC. So thanks again for joining us for this seminar. We'll see you online hopefully next week and for the following 2 seminars to finish our series. Ngā mihi nui kia koutou, ka kite ana.
Hekuna.